What's up, guys? Eddie Harvey here from TradeWithEddie.com. All right, guys, today we're going to be looking at EURNZD in today's session of What You Trade on Wednesday, guys, where I come on here on some Wednesdays, guys. I definitely trying to get back in the mode of being on here every Wednesday, and that hasn't been the case. But here I am. This Wednesday, been very busy with a lot of different things I have going on, but wanted to hop on here in the markets and share with you all some things that are happening. What I'm trading, I traded EURNZD today, guys. And I took this trade for a sell, 2 inches of sell and a sell limit. Closed both of those trades out for 60 pips in profit, totaling 120 pips in profit. Okay, so how did I get to that? What am I looking at next? So here we are, guys. What I'm trading today, guys, you all are always, definitely, if you've seen any of my videos, I'm always talking about trading, utilizing the break and retest strategy. And that's still part of my basis. But another strategy that I've been trading, guys, and working on and studying for probably the last 6 months, guys. I've really buckled down on it. I would say the last 2 months. Like the first 4 months, somewhat, but the last, I would say 2 months, I've locked in on it. Is I've been trading using smart money concepts, meaning trading like the banks, right? Looking at how the bank moves and taking entries based off of that. When it comes to smart money, guys, one thing I love about it is very similar to trading break and retest strategies, that is based off of price action, right? Can you use indicators? Yeah. Can you use, obviously different tools? Absolutely. But price action is at the basis and the foundation of it. And it's moving with the banks, right? And understand that the banks manipulate the markets. They move in the markets. They're going to make sure to get their money. And when you understand that and what they're doing, then you can capitalize and looking for key levels and key points for you to take your entries for you to get your money too. So let's get into it, guys. Here we are looking at some consolidation here, right? That's what I'm always looking for when we're talking about with a break and retest strategy as well. Okay, so we have a base here, this consolidation where prices created multiple highs and multiple lows. Indecision after this last bullish candle right here, price then tanked with this bearish engulfing candle and shot price down. This is going to be significant. I'm going to talk about it here in a second. From here, price dropped down, went into some consolidation, dropped down a little bit more. And then from here, guys, you can see here, what do we have? A downtrend, right? Because we had a high here, a low here, a lower high, a lower low, a lower high, a lower low, right? Lower high, well, this was like an equal low almost. So a lower low. Then from here, price leveled off, right? Creating a level of support in this area. So we have a level of support here. We have a level of support here. But this became a very strong level of support. Then price then decided what? It's going to push up. And now from this area, price came and is money. Is money sitting above all these areas, because this is where you start looking at where anybody who was seeing this as a downtrend, anybody was selling, they was placing orders all throughout here. So what am I talking about? If you look here, guys, even above here, money there, right? We call it liquidity as money sitting here, here, above all of these levels, here, here, right? So here's what happens, guys. Obviously, inside of all of this, we see what's happening with these areas, right? This is creating what? Double tops, and we have double bottoms in here as well. But price came up, we see what? The letter, what? You see an M in here, right? Up, down, up. Off of this second top, guess what someone did? Oh, I'm going to enter a sell. And they did. They had orders here, sell entries here, came down. Price broke out. It didn't retest up to this level, but guess what it did? It did create a new area of resistance, right? Making this the high and this the low. And guess what they did right here again as well? That's the high, that's the low. Oh man, we're consolidating. One touch. Came back up, 2 touches. I'm entering sales. Came up again, I'm entering for sales, right? So people are having orders right here. And for anybody that did, they either cashed out or they might still be in a trade, depending on what they're doing, right? But at the same time, if some of them left their stops up here because they're just, letting it roll, guess what the bank is seeing? They know there are thousands and thousands and thousands of orders being placed up here. So what did they do at this level right here? After this level of consolidation, someone will say, you know what? It came back up right here. They probably set a sell limit or something here, right? Thinking it's going to shoot back down, or a sell stop or whatever, or enter in the market for a sale. And guess what the price did? Boom, shot up, took out all of these orders here. shot up, took out liquidity above here, shot out, took out liquidity above here. So now you're looking at this to say, well, is the market becoming bullish in this area right here? Yeah, because it reversed where we have low to high to higher low, higher high, right? Now, this is significant because I talked about this area consolidation being significant because this is something with smart money that the banks are, what they do, but they're not going to leave them in the market. There are imbalances in the market based off of when they make their move. Imbalances and gaps, right? So let's talk about an imbalance. If you look right here, it's almost kind of like connect the dots, right? You see this last bullish candle before price drop right here, price drop, it left an imbalance in the market because the next candle never came back up to fill the imbalance between these two candles. Let me show you a little bit of what I'm talking about. If I draw a trend line from the bottom, let me blow this up, the wick of this candle right here, right? You see that? There's no other wick or the body of that candle touching this candle. After this candle closed, no candle never came back up into this candle. So this candle right here, by it not doing it, it created a gap. So here we have a gap in the market right here. Okay, and that's the low of this candle, the high of this candle created this gap. So at some point, this gap has to get filled. Okay, this gap has to get filled. So it can get filled at three areas. It can get filled at the wick, right? Which is this is the second most common place. The most common place is going to be at the body of this candle, which is right here, right? And the third place is going to be at 50% of that candle, which is going to be a little higher up in there. I'm not about to stretch it all out, but let's look at the one and two most common places. So, and what I've noticed, even if it does hit the wick at some point, that might be the first mitigation. On the second mitigation, meaning it's going to come back into that candle, it will hit the body. So let's take a look. Let's stretch this out and see what happened. Okay, this is to the body of this candle, which was from February 6th at 9 a.m. Look what happened. After price then came and took out all of these orders, the bank came, grabbed all of this money that was sitting above here. Look what it did. It came back and shot price right into this candle. So when I saw this happen, I'm like, boom. Okay, now guess what? It didn't break. This level held. Now had price shot up and took out liquidity above here, then I could have said, okay, there's a very strong chance at this point it filled this imbalance. Now it's going to continue to shoot up. But guess what it did? It filled this imbalance and then it shot down. Okay, meaning that this is still a strong area of resistance to fill the imbalance. And they said, hey, we're going to continue to push price down for now. So what happened was, boom, came right here. Same thing like over here. We had the bullish candle, right? That got engulfed by this bearish candle. So after that candle closed, this is something I've noticed, and I know, hey, that's a key sign of I know price is gonna come back potentially right into this level, right into the body. You see, it came right back into the body of this candle, not only once but twice. Even on this candle came into the wick. So and then it came almost even up to the 50% area of this candle. It came in here, and now this is where I took an entry. I took a sell. I set an alert right once I saw it hit this area. I got in for a sell, and then on the second one, I just set after I saw I was in some decent profit because there was some news going on. I didn't want to trade during news, right, on the U.S. dollar because it can affect the euro and Great Britain pound at certain times, like it did yesterday over here, right? But it didn't, and price continued to push down, right? The high impact news didn't affect it. So I got in at 60. So right here I was in. I said, you know what, I'm just set another sell limit right there. And I did. And I took it for a 1 to 2 risk to reward ratio. I had a 30 pip stop loss, right? So I entered here. Boom, 30 pips, like right here was my stop loss. And then you can see it clearly went for about 68 pips in profit. And I bagged 60 pips profit out of it. Okay, so now knowing that, what's next? So what do we have here? You see imbalances are getting filled. Same thing. Look what it did. It came down, filled the imbalance here. Now with this bullish candle, right? It came down, it filled the imbalance at the wick, but not at the body. So what am I looking for to happen here? I can expect price as it's doing now, right? If you look here, I'm looking for price to potentially push back up to fill this imbalance, right? Once it does that, from here, there is a possibility, right? Based off of what happens, there is a possibility from here price can then reject off of that area, and excuse me, it can reject off of this area and then go push back down to fill some gaps down here, fill this imbalance here, or with between these candles here, there are gaps. So even from between these two candles here, there's a gap between this one and this one. So it can go fill the gap in here, and there's also a gap up here. So, and why did I pick 60 pips? I like to do a 1 or 2 risk to reward, but also I knew 60 pips because you see it went for 68 pips. Because if you look right here, same thing, but now on the high side, the where you can look to get in for a buy on this. This was a bearish candle, and this was the last bearish candle before this price then shot up here. Price then came back down to fill the gap that was left between this candle and this candle. I already have it marked up right there, and it came right into that gap, and literally, because this candle fits inside this candle, if I'm making sense, right? This doji candle fits inside of, I think this is more like a hammer candle. It fits inside the body of that, right? So you can either base it off this candle or this one. You see it came literally right into the body of this. So even if I wanted to buy, I could have set a buy order right here and said, you know what? I'm going to buy right here, set a buy limit, right? And if you look, I could have took an entry right here. And then on this right now, I would be up about 18 pips. And if I would put my stop loss right below here, it'd been about a 14 pip stop loss, right? And now price is pushing up. And I can say if it goes up to this level, that's a 38, about 38 pips in profit, right? And then whatever be over a 1 or 2, 14 pip stop loss, 38 pips in profit. That's a little bit over 1 or 2. If I wanted to trade that, or I can be patient and wait to see if price is gonna come back to this area and push down. But guess what? If it does not, if it breaks through this level and continues to push up, then I'm going to be looking for a potential bullish move. Overall, the market is still bullish. Yes, I took that sell, but if you look right here, right now, this is bullish right here, right? And if you look to the left, it's going to probably have what we call a second mitigation, where it's going to come back up to this level. And if it does come back up to that level, if it doesn't make a stop right here and goes back up to that level, then it may drop back down after that. Or if it breaks through and takes out liquidity above this highest level of resistance, then we can look for it to continue and go up for a potential buy. Okay, so this is the 1 hour, and to get more clarity, you go to the higher time frames, right? I can go to the 4 hour chart and see what's going on. Are there any imbalances that need to be filled? Okay, so that's what you can do. I'm looking at the 4 hour, and the same thing. You look right here. Yes, this candle wick shot all the way up right here, but if you look at going into the body of this candle, price can come back down to here, right? Before it continues to go up. If I go to the daily, I can see where price is at, and I can say, okay, same thing. Boom, look where price is at. It can come back down because there is an imbalance between this candle and this candle. And I can say price can come back down to the body of this candle, right? And from here, then decide to push back up. And on all of these higher time frames, the market overall, and if you look at it on the daily, it's still overall. Now we're into a new trading day now. So the market is kicking up bullish. And overall, the trend still is bullish. So those are some things to look at, guys. So what am I looking for to happen? Overall, if I go back down to the 1 hour time frame, right now, I'm looking for, excuse me, I'm looking for a price to potentially hit this level and then come back to fill this imbalance. That may happen, okay? If that does not happen, where I would take an entry there, then I'm going to wait. I'm going to be patient too. That's a big thing of being patient, where I'll say, okay, I'll wait for price. Then I'll see if it comes to this level, right? And if if price holds here and it doesn't break through, then I can look for another potential sale at this level right here, at a higher level, right? I can look for a potential sale right here as well for a second mitigation back into there where it might hit here or it might hit the body. But if price decides to shoot up above, now I'm going to wait and be patient. And then once it starts creating more market structure, then I'll look for a potential buy on it if it takes out liquidity above this area. Okay, so there you have it, guys. I hope you all got some value from this. Listen, guys, if you want to learn more about the do's and don'ts of Forex trading, I have a free ebook, guys, an audio that gives you the 7 do's and don'ts of Forex. You can download that at tradewitheddy.com. Appreciate you guys tuning in. I will talk to you all later. Take care. Have an amazing day.